You don't get to test it for 2 seconds and then say it's good. We'll get to that in a moment, so stick with me. So we do some testing and things came out pretty good. You can see we're here on the Euro USD, and on the screen, you can see here's a couple different theoretical trades. Starting in the far left, I just showed a couple here. You can see, notice how that first green bar right before the red arrow pops up out of the Bollinger Band, and then we close back down. This was our rule for a sell, remember? And so we took a sell, we made 70 pips, okay? We wait until the price reaches an extreme, closes underneath the lower Bollinger Band. We close underneath, pop back in, and now that's a buy, okay? We make 97 pips. Not bad, looking really good, okay? We wait for it to come down, close outside, and then close back in. We get a nice 113 pips on our third trade example there, just from this small sample size. Then it happens again. We gain another 58 pips. This is looking pretty good, right? We see, a couple hundred there pips in profit just from a relatively, what is this? A few months span, maybe 3 months of just trading this one pair. Okay. Not so bad. Gained a few hundred pips, but this is not enough. I don't mean to sound negative, but you need to be negative if you're going to trade a strategy successfully. Let me tell you what I mean. I don't mean you should be sad or depressed all the time. That's not good either. But you need to be cynical to a degree when testing a strategy, because you can't just see the good without seeing the bad. A major pitfall that traders make is they try and test something and they test very, very thinly. They just test for, 5 minutes and they say, oh, this looks pretty good. I'm going to put some real money on it. Okay. Don't make this mistake. I made it myself. Don't make it yourself. It's not worth it. You need to test much more extensively. I know backtesting can be boring, but if you want to be a successful trader, if you want to be a profitable trader and treat this like a business, you need to test 500 to 1,000 theoretical trades over 2 to 3 years plus of historical data, meaning you go back 2 to 3 years in the chart and you test to see 500 to 1,000 theoretical trades before I really see confidence whether or not this strategy has some serious strength to it. Now, here's the thing. If you go back 2 to 3 years, especially now at the time of making this video, that's going to give you a couple different market environments that are very, very dynamic, okay? You want to see whatever strategy you do, you want to see it in different market environments to see how it performs overall. Now, remember, we saw just a couple examples back here. Great examples, right? 70 pips, 97, 113, 58. Great returns, right? Wrong, because look, we didn't test thoroughly enough. This is only a couple trades. This is great, but then get ready for the rain, okay? We just had the sunshine, here comes the rain. Look at this. Here is another one single trade based on our rules. If we had taken a buy position there at the blue as our rule said to, right? We get a close outside, we get a green candle back in. That's a buy trade. Look at this. Price took off to the downside. We saw continued selling, lots of strength to the downside, and bam, negative 481 pips. I don't know about you, but that looks like it erased most of the nice gains that we made here on the way down before, okay? So the thing is, you need to be extensive in your testing. Otherwise, you might not take into account the bad. Remember, it's not testing thoroughly enough unless we see the good and the bad. Don't make that mistake. That is a very, very newbie, rookie mistake that a lot of people make by not taking the time to really test enough. Backtesting is so very important in my opinion, okay? Now here's the thing. Backtesting looks a little something like this. You want to get serious about your backtesting? Here's how you do it. What you do is you get a spreadsheet or a piece of paper at the very least, and you do something like you see right here. This is just a theoretical backtest that I was, playing around with, okay? So you take transactions, buy or sell, very simple, enter, exit. You set up your rules or your theory. Again, we made a theory and you can see that, how our theory played out. We had a theory on Euro USD. We went and tested it. Okay. So start making your theories, start making your entry and exit theories, and then go do some testing. What you'll notice is that things change over time. Strategies that worked 50 years ago might not work the same they worked now. Okay. This is why when you get more advanced, my opinion is to have a couple different strategies so that if markets change. Some strategies do well, some don't do as well, and overall you still do fine, okay? That's a more advanced topic for another day. For starters, I think it's important to find one strategy that you see some pretty good results over many years of backtesting. That's my opinion. That's what I started out doing. Now I have a couple different strategies, but originally when I first became consistent, I got one strategy down, I got it really, really locked in, and I kept trading it, and I still trade a version of that strategy today. And there's nothing wrong with that. But again, you want to do this. Basically, my opinion, get a bunch of numbers in a spreadsheet, go through and track, take theoretical trades and see how it goes. So successful trading strategies require testing. And guess what? Testing is not fun, and it is not supposed to be, right? Most traders are never going to do this. And this is, again, one of the reasons in my mind that traders, most traders fail. They won't do this. Testing is like doing your homework. And if you're anything like me as a student, I was a terrible student. I struggled to ever do my homework. So you have to do your homework if you really want to succeed. I was not super into, success at school personally, but success in trading was very important. And this is like studying for your test. This is like studying and doing your homework. These are the things that make you successful. If you want to be a successful trader, this is very, very important in my mind. You need to test how something drives before you buy it. Okay, so it's one of the only ways in my mind to get an idea of the performance of a trading strategy. We'll talk to a little bit more to this in a future episode. Okay, so test historical data before you put money on the line. Again, test the car out before you buy it, because then if you put your real money on the line, you could be throwing it away if you don't have a good track record on this trading strategy. Right? So the next thing I'm going to do is just walk you through, again, the basics of backtesting. Don't get fancy here. I know people ask questions all the time. They're like, Nick, how do you backtest? What, this, and this. They get very, very specific. And for me, backtesting starts, if you're going to just get into the concept of the practice of backtesting, start very simple. Get your spreadsheet out or a piece of paper, have your strategy written right out in front of you very clearly, and scroll back on the chart 1 year plus, preferably as far back as you can go, whether you're trading on the 1 hour chart, the 4 hour chart, the daily, the weekly, doesn't matter. Go back as far as you can so that you get enough historical data and go bar by bar, testing your strategy on setups that you see occur. So if you see stuff that occurs and it fits your entry criteria without seeing what's going to happen next in the chart, take that theoretical trade if it meets your criteria and write down each and every trade, whether it's a winner or loser, okay? This will give you a decent idea of how your strategy has performed historically. Now, have you ever seen the saying, past results do not guarantee future results, or, is not indicative of future results? Well, there's a reason behind that. Markets are changing the way they trade, as we mentioned earlier in this presentation, okay? So you have to be aware of this and know that just because something has worked out historically does not necessarily mean that it's going to work 100% in the future. It has a better chance of working, and backtesting, in my mind, is still very important, because what else are you going to go off of? If we don't know what the future is going to hold, the past is a pretty decent indicator to consider, my opinion, right? We're not done. Backtesting doesn't guarantee anything. Well, to be fair, in trading, nothing is guaranteed. The only thing that's guaranteed in trading is basically broker fees or taxes or whatever, some sort of fees. Those are the only thing I've seen that are really guaranteed in markets. Avoid the optimized strategy. Okay, this is another thing, just a couple more tips on backtesting. Avoid the strategy that's backtested and it looks so perfect and you tweak it up, especially if you're using automated backtesting, which maybe is another topic for another day. If we're going to be talking about optimized strategies, these are the strategies that look so perfect on paper because you've tweaked them to be. If you tinker with data enough, if you tinker with the historical data, you're going to find patterns in that data and you're going to produce perfect strategies on historical data. This is another major rookie mistake pitfall that a lot of people get caught up in. They spend way too much time looking at historical data, and basically they find something in that data that looks perfect historically, and it's not necessarily going to be perfect in the future. They don't always end well going forward, and this is where we need to do forward testing.